Good afternoon. Welcome to Being Loan Ready with Community Lenders, the part one. On behalf of our president, Ron Busby, our board, chambers, and our staff, I want to thank you all for attending. I'm Warren Richard Jr. with the U.S. Black Chambers, Inc., affectionately known as the national voice of Black businesses. We represent over 150 Black chambers of commerce and small businesses across the nation and are founded on 5 pillars of service: advocacy, access to capital, contracting, entrepreneurial training, and chamber development. This Access to Capital series is a collaboration with our chambers of commerce, providing technical assistance and resources across the country with the U.S. Small Business Administration's SBA Community Navigator Pilot Program. And I'd like to thank them for their assistance in developing and sharing this program. Today, we have 3 insightful panelists with expertise in banking, business development, and economic development. Pay very close attention to the information. USBC and our 20 Navigator chambers look forward to being a resource to you and your business as you navigate through this journey. Before we introduce today's moderator, I encourage you to drop your questions into the chat, and we will address as many as possible at the end of today's webinar. Our moderator, Mr. Perry Scholes, is president of Progressive HR Strategies, Inc. Perry's a certified talent optimization consultant and business executive who successfully creates economic value through human resources leadership. He helped drive profitability at complex global organizations, which include private equity portfolio companies, large public companies, and private-owned businesses. He is also board chair with the New Orleans Regional Black Chamber of Commerce. Perry received an executive MBA from the University of South Florida and a BS in marketing from Tampa College. He's a certified HR professional, SPHR and SCP, Myers-Briggs practitioner, DISC, and certified talent optimization consultant. Welcome, Perry.
Good afternoon, everyone. Good afternoon. Thank you very much, Warren, for that introduction. So everyone, welcome to the first part of Access to Capital series, Being Loan Ready with Community Leaders. I'm your moderator and host, Perry Scholes, again from Progressive HR Strategies in the New Orleans Regional Black Chamber of Commerce down here in New Orleans. In this series, our goal is to define what it means to be loan ready and reinforce what Black entrepreneurs and business owners, the knowledge, the loan application process. And we'll be talking about the products to identify what are particularly best for Black business owners. So we have 3 panelists today. I'm joined in this fireside chat by industry specialist. First is Alima Redding, Vice President and Business Acquisition Manager for the Small Business Development Group. She's responsible for Mid-Atlantic, covering Pennsylvania, Delaware, Northern Maryland. She and her team of business development officers are charged with acquiring new business customers with sales ranging from 1 to 10 million. Alima and her team serve as a visible representation of Wells Fargo's small business banking, utilizing innovative approach to build meaningful relationships with customers and communities. She brings over 15 years of experience, ranging from business development, small business ownership, and regional leadership. Welcome, Alima. Next, we'll also hear from Carrie Pradico, Senior Business Development Officer with Pursuit Community Finance. She began her career with Pursuit in 2021, working in the modifications department and where she went back to her business development roots. Carrie's passion for assisting small businesses and economic development began as in her role as business development for Schenectady County. This knowledge allowed her to continue doing what she loved, both as a community development lending officer for a community loan fund and conventional lending for NBT and KeyBank. Carrie has also run a successful small business for many years, which is still in operation today. So she has firsthand experience that allows her to understand and empathize with borrowers and business owners. Her true passion is helping other businesses reach their full potential and thrive. Welcome, Carrie. And last but not least, our final panelist, Clarence Campbell, Senior Managing Director of Sales for Lendistry. He's responsible for leading sales operations, client experience, and business development. Clarence has over 27 years in banking leadership experience with a successful track record of driving revenue and sustainable organizational growth. As a native Baltimorean with a passion for people, Clarence understands the importance of being the community and a huge proponent of small business and community development. So before we jump into our conversation, we would like to conduct a poll. So we'll pull it up on our screen and then get your thoughts about what are your thoughts concerning financial, securing financing for your business? How confident are you in the application process? Very worried, little concerned, not sure, optimistic, very confident. So use your computers and just click on which one you feel, the space where you feel you are right now. We'll come to the second part of the poll later. Then Warren's my co-captain. How many more? We have 30 seconds, 45 seconds before we close.
We can wrap up in a few moments. I think we have a couple responses. I'll stop the poll now.
All right. I love it. So we've got a mixture of very worried, little concerned, not sure, and optimistic. It's great to see we have some people that have been in this game before and understand a little bit and or excited about it. So thank you for your participation. So first we'll start jumping into with these experts that we have here today. So I am really happy to have you here, Alima. You're such in business development and a veteran of the finance space. So building meaningful relationships with customers and community is extremely important. So you and I sort of share these interests for business development opportunities for small businesses. Kind of sounds like a cliche, but the importance of banking and as a relationship business, what has influenced you to adopt that principle in the banking space, and how do you get this across as an important piece for your small business clients?
Well, thank you so much, Perry, and thank you for having me, and thank you for your kind words. I think that relationship is key. It sounds cliche, but the reality is that you need relationships to help drive what you're doing and how you're growing your business. You can't do it alone. So you have to figure out your team and the group of people that are going to help you get to where you want to be. And by them helping you, you're ultimately helping everyone, right? So when I think about the importance of a banking relationship, you know your business and your banker will know the bank, right? And know the intricacies of the bank. And the one thing that I always lean on is to kind of take a step back is that 5 C's of credit. And when we're thinking about the credit application process, the bank is looking at your credit history, how you handled your past credit obligations, collateral, personal and business assets, capital, so your personal investment, like what's your skin in the game, right? Conditions, everything that affects your ability to repay the loan, right? So internal and external factors, and then capacity. So how your business will generate enough cash to repay the loan. So these are important. And when you think about your banking relationship, you're going to lean on the 5 C's, and you want a banker that truly understands what the bank is looking for and can help you guide you through collecting the data work that you need, and also creating a package that tells your story to the underwriting team. So it's really important to have someone in the bank advocating on your behalf, who understands your business, who understands where you're at, where you're going, and can tell that story in a way that the bank can receive. I mean, we know what lenders are looking for, right? And I think about here at Wells Fargo, we're looking for a few things, right? So what's the purpose of the credit? A banker can help with demonstrating that story, right? What's your credit history and what's that profile? What happened in the past? Why is 2020 different than 2023? We all know that small businesses suffered in 2020 and are continuing to rebuild their business 2021, 2022, and now into halfway through 2023. What your company finances look like, and then also the application details. It is important that we nail the application and that we're working with you side by side to make sure that that information is accurate. So when I think about the importance of a relationship, it's not just someone that is interested in helping you grow your business, interested in why you do your business. It's also a banker that understands the process. It can help you navigate it as you look for access to capital. So it's important, it's cliche, but make sure that you know your banker, they know your story, and they know where you were and where you're going.
Awesome. Thank you for that. And so we were just schooled on the 5 C's of credit. So thank you for that. What loan products does Wells Fargo offer to provide small businesses in different industries, working capital, acquire equipment, or real estate? And then what questions should they be prepared to ask and or answer in that dialogue or discussion, if you will, with the banker?
Yeah, that's a great question. And I think about the products that are offered here at Wells Fargo, and they're really customized to what your business needs, right? So we offer credit cards that are convenient and they help you manage your everyday expenses. We also have lines of credits available. We have secured and unsecured lines of credit. We go as low as $50,000 on the unsecured line of credit. So depending on what the business needs, your credit profile, we can provide you with an unsecured line of credit, right? Commercial real estate financing, and then SBA loans and lines as well. And then we also have a really robust practice finance healthcare financing option as well. And I really encourage everyone to hear what I'm saying, but also check out wellsfargo.com and visit their small business segment to see what is available for them, or feel free to reach out to me on LinkedIn as well.
So can you talk about, tell us about what should they prepare to sort of ask and answer when they're having that discussion in a dialogue with the banker?
Yeah, so you want to have your business financials prepared, right? So we want to know what what occurred in the past for your tax returns, and we want to know what you're projecting as well. So that's really important. You also want to know why you're using or what you need the credit for. That's really important. So for instance, if you see there's some business or an opportunity to refinance your commercial building. I was once speaking with a customer who wanted to take the money out of their commercial real estate property to put towards reconstructing their home. Unfortunately, you can't do that, right? The money has to be used for the business, right? For some type of growth or some type of additional growth to that business. So you want to be very mindful of, what am I using this for? How will it help grow the business? What do my financials look like? And how do I tell the story of, one, can I repay what was lended to you? And then also, what's your capacity to pay down the road? So that's really important. You want to be able to tell a full story about where your business was, where it is now, and where it plans on being in the next 2 to 5 years.
Yep. And if you're going to interview a banker to decide if you want to work with them, what should they be asking that banker?
I mean, I think sometimes the proof is in the pudding, right? So you want to make sure that the banker follows up with you, right? That there's some cadence to what's the timeline, what's the front, tell me what it will look like for me if I am the business customer and I have everything that I need, I'm ready to go. What will that from start to finish look like, and how will you be a part of that process? Some of it is a tough conversation, and some of it is just supportive, saying, okay, well, we need this piece of documentation, and here's the reason why. So when you're thinking about working with a banker, you want to have someone that's responsive. You want to work with someone that has your best interest in mind, that they want to do what's best for the business. So even though you may want to do X, the banker's going to come in and advise and tell the reasons why maybe a line of credit would be better than refinancing your property, right? So we want to ultimately work with someone that has our best interest in mind. That's why you want to lean on that relationship. They understand your story. They're cordial, but also helping you drive towards that goal of access to capital.
Awesome. Thank you so much. I told you guys we had experts here, so thank you, Alima. So we're gonna welcome Carrie Pradico. And so I'm honored first to be in this webinar with you, Carrie. And so so you heard Alima talk about the importance of banking relationship when preparing that loan application. For what should new business owners, what do they need to know about commercial community lenders? What are they looking for in that financial package? So can you help us uncover that piece?
Sure, absolutely. First, thank you for the wonderful introduction. And I'm also honored to be part of this panel and this exciting webinar series on being loan ready. So thank you very much for having me. But before I address the question specifically, I just wanted to add that it's extremely important for business owners and myself in my role with Pursuit to have and maintain a banking relationship. I work closely with bankers all over from New York, New Jersey, Connecticut, and even Pennsylvania in order to better serve our small businesses. For the question on what do community lenders like Pursuit Community Finance look for in new business owners' financial packages, is an answer that no one likes to hear. And I hope you're ready for it. It depends. So here at Pursuit, we offer loans from $5,000 to $5.5 million. My fellow panelists and I will likely agree that when we're working with businesses of such a wide range, from how much you're borrowing to how long you've been in business, to even as specific as what industry you're operating under, it really does depend. But don't let that discourage you in any way. The relationship starts with your banker or someone like myself who works in business development. We all play very well together in the sandbox, and we're your biggest advocates and want to see you succeed. What makes Pursuit kind of stand out is how easy we make it for you to qualify and how streamlined our process is in applying and receiving funding. It initially begins with a conversation with me, and I will learn more about you, your business, and walk you through what's needed and answer as many questions as you have. To generalize the answer to the question, a new business has different requirements than a business that's already been in operation. So say for a business that has been in operation for 2 years, we would need to see 2 years of your personal and business tax returns, a debt schedule, a balance sheet, a profit and loss statement, a completed application, a government issued ID, 2 months of your most recent bank statements. And also don't worry if you don't know what those documents are, that's what we're here for. Once receiving those documents, it will assist me in seeing that bigger financial picture for your business and what the need for your business may be. From there, we can work together to complete the loan request. This is a general overview of what a business in operation would need to apply for a loan within Pursuit. New businesses would have added documents like a business plan, cash flow projections, and a personal financial statement, just to name a few. Again, no need to be intimidated by this. If you don't know what any of these are or how to prepare it, that's what we're here for. We'll guide you to someone who can help you if it's not ourselves. And it may seem overwhelming to kind of hear all of these items listed out today in one fell swoop, but our job is to assist you. We're here for you every step of the way.
Awesome. So, Carrie, so there's just a ton of stuff on the internet that, you know, business owners can go and try to do their own research and figure out, you know, financial resources. So, what's the difference in what Pursuit lending loans, and how do they different in your loan area? How do they different from traditional lenders? And tell us, if you could tell us that first.
Sure, absolutely. So Pursuit loans differ from traditional lenders in many different ways, and it's all based on what the applicant is looking for to determine which loan best fits their needs. This is why having a strong relationship with your business banker is very important, and why it's also important for me to have that strong relationship with them as well. We work together to help you have all of the information so that you can make an informed decision through a bank, through me and your bank. But that doesn't mean that your options don't end or don't stop at the bank. Many businesses don't qualify for conventional lending through a bank, but that doesn't mean your options end there. There's access to capital through organizations like Pursuit to fill that gap. Conventional lending tends to have harder lines that they can't cross, like requiring high personal credit scores, or their turnaround time is longer, which may not benefit what the business's need is. Pursuit Community Finance is able to make exceptions. For example, for an automatic approval through Pursuit's microloan program, you would need to be in business for 2 or more years, employ 2 or more people, have a positive or break-even cash flow, have a personal credit score of 640 or higher, have more than 120 in annual revenue, have no liens or judgments, and no prior bankruptcies. Now, just remember, this is a list for an automatic approval through my program, but that doesn't mean that if you don't have all of those boxes checked, that you can't apply. I like to imagine a little asterisk next to each one of those items, and we can still explore a loan if you don't meet those qualifications exactly. Say you've only been in business for 1 year, that's okay, you can still apply. It just means you don't qualify for an automatic approval. We do exception-based loans all the time, as it may still make sense to provide you the capital as your business will benefit from the loan in the long run to keep you on the track for success. If you look at this slide, you'll see how alternative community lenders and institutions like mine can benefit your business growth. I'd like to add, you will see characteristics of heavy on paperwork and a slower process as a negative for alternative lending. Pursuit stands apart from that as we've streamlined our process to accommodate the busy business owner. If you have all of your documents ready, I'd like to think that our application would take you no more than 20 minutes. And then once all of your documents are uploaded and submitted electronically, I will receive a notification immediately that it's completed, and I will begin my initial review. While being in touch with you through the whole process, I will let you know when it is submitted to underwriting, and you will receive a decision within 48 hours. If approved, you'll be funded within 5 business days, which I think is absolutely remarkable. Sometimes it only takes a small boost of capital to get your business on track for success. With a lender like Pursuit, you'll be able to take advantage of a fast and effective application and approval process with lower interest rates and fees. We also offer you a longer term to keep your monthly payments affordable. This type of loan can be used for nearly any business financing need. We also offer in a few of our programs post-loan technical assistance, from help with learning how to use QuickBooks to possibly assisting in a marketing initiative or even website development. A lot of programs like mine offer pre-loan technical assistance, but it's our post-loan technical assistance that kind of sets us apart from other alternative lenders. These are just a few examples on how we differ from traditional lenders, but I'll stop here if there's any other questions.
I do have one note. So what do you think are the steps for a business owner to determine what's the best loan for them?
So the best, I would say, to kind of work with their business banker. Like I said, I work very closely with business bankers. And if they don't know about alternative lending, that's something that the business owner might need to explore on their own. But it almost does a disservice if the business banker doesn't know alternative sources. Like I said, there's harder lines when it comes to conventional lending, where alternative lending can do a lot more exception-based approvals. And I do believe that it maintains the relationship within the conventional banking world if they are able to refer out. I would say information gathering and really sitting down with your trusted business banker or somebody like myself to really explore those options. Ultimately, it is up to the business owner which option is best for them.
Lima, can you just chat about ways to find the best loan?
Yeah, I think Carrie brings up a really great point. I would want to say that our bank is always the best option, but we're coming out of a pandemic. We're looking at 2 to 3 years worth of tax returns. We're taking on projections. So a lot happened to small businesses in the past 2 to 3 years. So they have a story. It's not necessarily a story that is always palatable to a financial institution, right? Because there's risk on both sides. So we want to look at the whole story, and there is a lot of research that can be done to how do you gain access to capital. I think Pursuit that we have with Carrie here on the line, Lendistry with Clarence as well. I know he's going to speak as well. These are partners that we work with in at Wells Fargo Bank. And then also just thinking about the local CDFIs that are in your area. Wells Fargo with the PPP returns, we set up an Open for Business fund where we put a lot of money back into underserved communities to say, hey, you know what, we understand that this community, our community, was hit hard by COVID-19 and the pandemic in general. So we're working with local CDFIs to help bring back capital to certain areas. There's also different options such as seller financing. Factoring is also an option. Peer-to-peer lending groups online are an option. Mission-based lenders, so women-owned business, Black-owned businesses, Hispanic-owned businesses, that there's options out there as well. And then there's also a plethora of community development grants. I think that you'll see a common theme of talk to your banker. Your banker will understand the resources that are available, and the two of you can put your heads together and determine what is the best path forward. We're not going to deny anyone to apply for a lending option, but we can have a conversation based off the documentation of all the available options. Your banker is going to have some options for you, whether it's their financial institution or other options available in the community. But then also anyone here on this line can be a resource. And I really encourage you to reach out to us on LinkedIn to see how we can help and support.
Awesome. Great. Thank you very much. So Clarence, also thank you for being here. So on the SBA.gov website, there's loan programs for small businesses. 7A, there's an application checklist, including 9 to 10 different forms and financial statements that need to be completed as a part of the application. Can you share with the audience, first of all, Lendistry's connection to the SBA, and then how the SBA 7A program works?
Sure. Well, and thank you, Perry. And again, it's a pleasure to be here participating in this important conversation and with this very esteemed panel. Let me first step back and just kind of explain who Lendistry is. And so we are a community development financial institution, minority-led CDFI. It's often commonly referred to. And, you know, as a community development financial institution, our focus really is twofold. It's really around ensuring that small businesses are educated with the critical information that they need, much relating back to a lot of the questions, Perry, that you've already asked. And then two, it's really around providing access to capital. And so we do that in two ways. One, we're an administrator of grant programs where we work with state and local governments throughout the country. And then two, we are a nationwide lender. And as a nationwide lender, we provide lending solutions through the SBA 7A program, as well as through our non-SBA solutions. And I'm sure I'll talk a little bit more about that a little bit later on in terms of the various products. But I thought it would be good to explain, you know, who Lendistry is and how we operate, again, a nationwide commercial lender. And I know you have here, Perry, you mentioned the many forms, right? And these are the things that can often intimidate small business owners, because we know that, you know, first and foremost, as a small business owner, you're spending a ton of time doing what you do extremely well. And so one of the things that I think we do at Wells Fargo, as well as Pursuit in Lendistry, is we try to make the process simpler, right, and easier. And so as you can see here on the screen, I'm going to talk a little bit about the basic items that are required when you initially apply. And they've been alluded to throughout the conversation, but I'm going to give a little more background on it and why they're so important. First and foremost, you've got loan application. And it may sound very simple, and it is, but the loan application serves two purposes. One, it helps your lender get a better understanding of the company. You provide things like business structure and ownership through the loan application, and it really helps to begin to provide that framework in terms of what you're looking for. The other thing is, with the loan application, it is you providing consent to move forward, at least providing consent to do various background checks and things of that nature. And one of the things that we've done at Lendistry, leveraging our proprietary technology, is we realized it was very important for business owners to be able to apply anywhere and anytime. And so we've done a nice job of really perfecting our technology that really allows a business owner to complete the loan application at 3 o'clock in the morning from your cell phone. And so, you know, again, that loan application, while it sounds very simple, it serves a number of different purposes. You got a business debt schedule. And I do want to take a moment to provide some clarity here, because one of the things that we see with the applications that come through is sometimes there's a misunderstanding around the business debt schedule. And this is really capturing the existing debt for the business. And the reason it's really important for your lender to understand your existing debt, in many cases, when you apply, there's not a way to see all of the debt that you have out there for your business. So it's really important for the lender to understand that, because part of this process involves not only the lender assessing whether or not this is a good debt or a good obligation for the lender to take on and extend, but also assessing whether or not your business is ready or prepared to take on that existing debt. And so understanding the existing debt for the business, as well as any affiliates that may be part of the business, helps to really understand that. But that's the business debt, not the owner's debt. And so I always like to provide a little clarity around that. We've talked a little bit so far about tax returns, and this varies from one organization to the next, right? Quite frankly, it varies from one program to the next, depending on how many years of tax returns you're looking to provide. And we look for 3 years business tax returns. And I'll tell you why that's so important. One, it helps us to analyze the business trends from a cash flow perspective. And you'll hear a lot of things about cash flow and things of that nature. And it's a very important aspect in the lending and review process. But gathering those 3 years allows the lender to see what the trends have been. Alima talked a little bit earlier about the impact of COVID, right? And so we know that the trends have been different during COVID and coming out of COVID. So it really allows the lender to analyze those trends. We would look at that not only for the borrowing entity, but any other affiliates that might be part of the loan as well. And one of the things that's really important to note that as we look at the tax returns, we're not looking for just the first couple of pages. We're looking for the complete tax returns. And the reason that we're looking for the complete tax returns is it really helps your lender to get a better understanding of your overall business. And this, the question came up earlier, well, how do I determine what's the best solution? And so having things like the tax returns and looking at trends allows your lender to work with you to provide the best solution. And just so that you know, your lender is typically looking at something called EBITDA, your earnings before interest, taxes, depreciation, and amortization. And the reason that that's so important is because those are the funds that are really available to service any debt, to pay any debt that's coming in. It's kind of like your gross income and your net income, right? You can only pay out of what you're actually retaining or what you're getting. And so a lot of times what we find is that business owners focus on their gross revenue, but your lender is really evaluating not just your gross, but your net and what you have to actually service the debt. So that the 3 years tax returns are very important. We also will look at 3 years tax returns for the individual owners. And so understand that typically if you're applying for a loan, most lenders, particularly here at Lendistry, we're going to look for a personal guarantee in many cases from any owner that's 20% or more ownership of the business. And so we would be looking for those tax returns again to look at the trending, but we also here at Lendistry, not only do we look at business cash flow, we look at something called global cash flow. And so that's looking at the business income and cash flow, but also looking at the individual owners and taking into consideration any income outside of the business. So those are really important. I often find it might sound simple, but to really have a good understanding of why we're asking for those tax returns and why so many, the number of years. You're also going to be asked for your interim financial statements. And this is something that we often find that some small business owners struggle to produce. And it's really important. Your tax returns are typically a year, sometimes 2 years aged, right? Depending on where you are. But your interim financial statements helps your lender understand how are you operating today. Looking at your balance sheet, understanding what kind of assets and debts do you have today. And so it's really important to understand that those are going to be required along with the tax returns. And then your bank statements. And so, one of the great ways for a lender to really assess the current operations of the business is to look at your bank statements. And so they're going to ask you for your bank statements. We here at Lendistry look at actual physical bank statements, and we also partner with Plaid to be able to look at them electronically. And so you're typically at least a 3-month trend, most recent on bank statements are really important. It's also another way that lenders use to identify any debt that might be out there. And so being able to go back and look at bank statements and understand what are you paying out, again, it's really about assessing, is this a good move for not only the lender, but the business? And then ID verification is really critical. Again, looking at verifying the ID for the owners. Alima alluded earlier about the 5 C's of credit. One of the big C's is character. right? And so one of the things that we're going to evaluate in that background check is the credit rate of the 20% or more owners. And so ID and background verification is really important. And then along with that comes your personal financial statement for the owners to really understand the current financial position of each 20% owner. So just wanted to take a moment, Perry, to go through those items, provide a little more clarity around why so much information is required. And I would be remiss if I didn't say that this is typically what's gathered from a preliminary perspective. Depending on what your loan, your use of proceeds are, or your project that you're doing, and I think Carrie alluded to this earlier, it just depends, right? So depending on what the project is, there could be additional items that are required as well.
All right, so I just want to reinforce the level of expertise that we have here on this webinar. So we're going to move in a second to answer questions. So please, if you have questions, go ahead and start to put them into the chat, and you know, we can get through all of that piece. So while people are starting to put their questions and stuff in the chat, so can you all just each one, you know, go through what are resources that you have available? I've heard about, you know, websites, being able to put an application on through the phone, SBA 7A, all of those kinds of things, the difference between, you know, commercial, community, CDFI, all that stuff. What are the resources, right? Could you maybe, Alima, let's just start from the top where we started this morning. Can you jump in and just talk about resources?
Well, great question. And really, Terry, Clarence, it's so nice to be on the panel with you and just listen to how we align so much and doing what's best for the small business owner. So when I think about resources, I would definitely go to wellsfargo.com to see some of the articles published, some of the resources that are available, even just how to prepare for a credit application. There are tons of resources available through wellsfargo.com. And then also I would, Clarence talked about his CDFI that he's a part of. I would also look and see who is your local CDFI in your neighborhood, in your region, in your area. And also lean into some of the resources that are available throughout the community as well. But visit wellsfargo.com, click into small business, and then you're able to see some of the resources that we have available.
Carrie?
Sure, just to piggyback off of all of that, it is awesome how we kind of all mesh together. So Pursuit also offers 7A and 504 SBA loans, as well as we are a CDFI. So we are your local CDFI for New York, New Jersey, Pennsylvania, Connecticut. You can reach out to us. Our website has a plethora of knowledge. So pursuitlending.com, we actually have a resources tab with business tips, partner tips, success stories. Obviously, reach out to your US FLAC chamber, reach out to your local chambers. Keep signing up for these webinars if they fit within your day. I know I do a lot of webinars when I'm driving instead of listening to music. I think always kind of just checking out your local chamber, or your business banker. Your business banker will absolutely have all this information. But I think a great step is just attending a webinar like this. Now you have a bunch of different people here who absolutely work well together. And we all want to see you succeed. So I just found it very fascinating, Clarence, about how similar we are. And Alima, obviously I work with banks on a daily basis. So we are here for you, and check out all of our websites and what we offer. And if we don't know the answer, at least I'm pretty sure this is how all of us work. If we don't know the answer, we're not just going to say no and turn you away. We're going to go, let me find somebody who can help.
All right, Clarence?
Yeah, much along the same lines, lendistry.com, tons of resources there. One of the things that we do provide is something called an application guide that actually allows and provides some guides and some support throughout the process as you're completing that application, just in case you happen to be doing it at 3 o'clock in the morning and can't get one of us on the phone, right? Gives you an application guide that you can go through. But I'd also, Perry, like to just provide a little clarity as well. And I didn't say this earlier on, as you think about alternative lenders such as, Lendistry and Pursuit, it's really just an alternative to your commercial bank. And I'm a banker. I've been in the banking industry for 30 years prior to joining Lendistry. But I think it's important to also be clear that Lendistry as a CDFI, we're not a competitor with your commercial bank. We don't compete with Wells Fargo and the others. We're partners. And so part of where we step in is to provide that support to help you get to the level. I think in I think it might have been Kerry's slide, I saw the ladder kind of stepping up to the consistent and stable. And so part of what we do is we provide that support as for a small business owner to provide the capital that you need to scale and grow to also get to a place where you are more bankable with your commercial bank. So I always like to clarify that we're not a competitor, we're partners. We partner with over 50 different banks throughout the country, Wells Fargo being one, but it's with a common goal. It's a common goal of providing the needed capital to help small businesses scale and grow.
So Clarence, I'm digging in to the questions. And so one of the questions sort of talks about this, since there's similarities, is it okay to work with multiple lenders and small business funding programs? What's your thoughts? Anyone want to take that on?
I'll jump in and to start it off. And so there are a couple of things, and I think the question was asked earlier is where should you start? One, I think it's also important to understand that not all lenders do the same thing. There might be the various products. When you think about it, there's really only a couple of basic lending products, right? You got a term loan, you got a form of a line of credit, but the programs vary and the lending and underwriting guidelines vary. And so part of what you should be asking the lender is, based on your use of proceeds, your project, is that something that your lender is equipped to provide? Because your lender may or may not be able to do that. And if that's the case, then you may need to seek a lender that can do that. I often advise many of our clients to start with their commercial bank. Start with your banker. I think your banker is one of the key components on your team. And so starting with your banker to understand what they can and can't do. And quite frankly, that's how we get a lot of our clients, is from referrals, because for whatever reason, perhaps at a Wells Fargo, if the credit score is, say, 680, and they've got a hard stop at 680, with an alternative lender, we may have a target of 640 or 620. And so it's really just that community of understanding how to support. So to answer your question, Perry, absolutely, it may make sense for you to evaluate with more than one lender.
Okay. All right. So one other question, how it's impacting, will an old bankruptcy be from one of the owner's credit on the entire business potential to acquire new loans? So one owner had a bankruptcy, and can you just maybe share what you'd impact on the overall business potential?
I can jump in on that one. Here's the answer. It depends. I hate to say it. So it does depend. If you have an older bankruptcy, obviously you're going to have many more years of experience since that bankruptcy. Like I said, for an automatic approval through our CDFI, for an automatic approval only, you can't have any. Doesn't mean we won't look at it, right? So we don't fault people for having a past. Say it has nothing to do with the business. Say it has everything to do with business. Say the best thing that you can do for yourself and your business so that we can help you as best as we can is be 100% honest with us in everything that you know. We are not judging you. We also are, in this fellow human world, we have stuff happen to us as well. We want to be able to tell your story, as Alima said in the beginning, as best we can to underwriting and maybe you don't fit into a conventional lending where you're going to fall into Clarence or what I do. Tell us that you have a past bankruptcy. What happened? How did you dig out of it? We can do more exception-based loans. So don't count it as absolutely never going to happen. Reach out, talk to us. We understand that life happens.
All right. And then we'll go into one of our final questions, resources to help a business establish a business line of credit. Starting to choke up on this one. Establish a business line of credit with 0% interest to get the business started off in the right direction.
I'll let,
I think we're all still hung up on the 0%
Yeah, I think-
interest.
That's why I said I was choking up on that one.
if you know about it, let me know too, Clarence.
So what I'll say is I think it's important to understand that there are different ways to access capital, right? And so we all happen to be talking about debt obligations, right? But there's also something called a equity play as well, right? And so it really depends on how you're looking at the capital that you're looking for. I will tell you, you're likely not going to find a lending program where there's no income, no interest attached to it. And I'll tell you why. Part of what your lenders are doing, first and foremost, the most important thing to any lender is to be repaid. Because as you repay the capital, that allows that lender to extend that capital out to other places. So being repaid is very important. But the lender is also, in fact, each of us, we're in business to also make sure that we can be fiscally operational, right? And so that's where the income that comes from, assessing the risk and things of that nature you would have. And so certainly we can help you establish the capital that you need, but in most cases, you're not going to get a loan that doesn't have some type of interest that's associated with it. It's the basic foundation of the way loans work. You would probably be referring to something more of a grant program, or even looking at a different way of accessing capital. So it could be more that, Perry, that we just needed to understand that question a little bit more. Maybe there's another, something else that's trying to be asked there.
Yep, understood. Okay, one last question.
Great. I just want to say, Terry,
Yes.
we have to go to the poll, our
Okay.
final poll. Yeah.
All right. So we're going to jump to the poll and then we'll do a wrap up.
Awesome.
So after today's training, do you feel more confident about your understanding of the application process for business financing? And let's just let us know what the countdown's looking like.
Yeah, we're at 33 seconds in. We can stop right at the minute or a minute and a half, whichever is best.
Okay.
All right.
And
We want to stop now?
yes.
Yes.
Okay.
Okay. So yes, we have, looks like a tie between optimistic and a little concerned.
Well, in the first poll, we didn't have any very confident, and so we do now. So that's pretty good. And I think we got a few more optimistic, but there's still some people on the very worried and a little concerned. I'm just gonna do a wrap up, and from the poll, I would say those individuals that are very worried, really reach out and start to develop a relationship with the banker. And that's the intentionality. I think the one consistent thing across all of our panelists today is about the relationship. And, I can tell you personally that having a banking relationship with the line of credit I have for a nonprofit I run, my banker informed me that someone who I have a relationship got that loan approved because the metrics didn't allow for it to be approved on its own merit. And so that was because of a relationship inside the bank. And so just really encouraged on that. So just key points from today. I really love Alima bringing in the 5 C's of credit. So we'll get you these slides and you will have this information. So really understand what that speaks to. Be clear about what you need the money for. So just because you have the capacity and the capability to qualify for a loan, borrowing money may not be the right thing for your business. So be clear about what you need for it. Don't be afraid to ask questions. So I do a lot of consulting and said, if you're working with a consultant and that consultant doesn't also function as a teacher and teaching you the insights of what you're doing, help you grow as an entrepreneur and a professional, then in that meeting and move on to the next meeting. Your banker should be also a teacher in helping you to understand how all this work and really to grow your financial knowledge. All of these organizations have education and educational resources. And I would also say, even on the fundamental side, on the retail banking side, look into financial literacy resources, just the basics on credit, bank accounts, credit cards, learning how to manage your personal credit. You saw on the slide, your personal credit will be a part of the discussion. And so if you got great business credit and poor personal credit, it's still going to be kind of a way down on your ability to financial business. And the last thing I thought was absolutely huge was about character and the character of what your business and how you conduct yourself, and that banker's ability to say, I know this business owner, I know the owners, and I know how they act as a leadership team and what their intentionality is as a business. That character piece is tremendously important. So with that, Warren, I am going to turn the floor back over to you to say, thank you for allowing us. Thank you for this beautiful group of panelists. Absolutely wonderful. Appreciate you all being here. And Warren, I'll give the floor right back to you.
Awesome. Perry, you're the best moderator I think I've ever worked with. Absolutely. Thank you so much. And these speakers has been outstanding. Thank you all for attending and participating in our discussion today, Being Loan Ready with Community Lenders. If you missed the welcome at the beginning of today's webinar, we indicated that any questions you did not get a chance to answer during the webinar, we'll make sure to get answers afterwards. We invite you to give us your feedback on today's session. Just scan the QR code on the screen or type in https://surveymonkey.com/aura/biz-future. This discussion was possible through our work with the SBA Community Navigator program, funded in part through a grant with the U.S. Small Business Administration. On behalf of our president, Ron Busby, our board, our chambers, and our staff, a tremendous thank you to our moderator and guest speakers. Perry Scholes, board chair of the New Orleans Regional Black Chamber, Alima Redding, vice president, business acquisition manager with Wells Fargo Bank, Carrie Pratico, senior business development officer, Pursuit Community Finance, and Clarence Campbell, senior managing director, sales with Lendistry. And our Community Navigator Chambers for advocating for Black businesses, and to you, our viewers, for sharing in the discussion. USBC introduced Buy Black, the only Black certification program with a business directory, providing businesses that certify access to private and public procurement opportunities, highlights, and other benefits. This online program can help prepare you for the contracting space as a documents preparation guide. Certify today by visiting usblackchambers.org/certification. Join us for future events such as the one tomorrow, 1 o'clock Eastern, setting up and protecting your online shop. June 22nd, we have at 5 to 6 p.m. Eastern, e-marketing with MailChimp and other email marketing tools. We also have on June 27th at 1 p.m. Eastern, here's how to build and nurture business credit through relationships. A very nice tie-in to today's webinar. And then finally, July 19th through the 21st, USBC National Conference. This is one of the biggest conferences that we have during the year. Designing the Future of Black Business. It'll be at the Waldorf Astoria in Washington, D.C. You don't want to miss that. And for more events like these, regularly visit and certify your business for upcoming events at usblackchambers.org/webinars. Follow us on social media at usblackchambers.org. If today's forum prompted additional questions and interests, feel free to contact us at programs@usblackchambers.org. Thank you for joining us today.